And, this looks a little familiar, right, Jolyn?
Totally.
She.
Yo, it is the old school.
I thought I could fool you. So tonight we're taking it back a little bit old school. We're gonna be in the midst of a few more upgrades, but let's just adjust this camera because that's all we know right here. That's all we know. There's also a good song that goes by this title. It's all I know, or all I knew.
Okay.
Yeah. What's up, y'all? So this is, of course, Mark Monroe, accompanied by my wonderful co-host, co-creator, co-producer, good friend, galactically landed here in the wonderful Emerald City called Seattle. Just here to just, bless us tonight. We got the wonderful
Jolyn GC in the place to be. Hold up. There's a tech announcement, not to y'all, but background. Hold on.
One moment.
Okay. Wow. Okay. Y'all bear with us. We're having some tech issues.
You get what I'm saying? Let Zoom and Windows 11 both have a single upgrade in a single situation, and then all of a sudden, boom.
Who's showing as the first person on your end?
First person on my end, I currently cannot see it, but I will actually delete this event that was supposed to happen. So then that way everybody can come over to join us. Boom, there it is. So we should be able to see them pretty soon joining us here on the live.
Okay, I see Sandra or Sandra. I'm not sure. So I'm gonna say, hey girl.
All right, let me check it on my end.
Okay.
Survey says it was Sandra.
Yes. All right. All right. So that's linked up, LinkedIn.
Yes. So we are officially linked. We are here. If you guys can go ahead and share this. Tonight is a very, very special episode of the Come Up series. I've entitled it In the Loop with our wonderful guest, Miss Sidney Dillard, which you will see in a second. She will join us in a moment. But I want this episode to be one of those episodes where it's inspirational for that young Black girl that is looking to, find role models. Look no further. You're going to see a ton of role models on your screen tonight. If you don't see that many images that look like you, prepare yourself, because you're going to have some phenomenal people in which that you can look to as role models, sheroes, that will honestly bless you with such great knowledge and wisdom. And me personally is going to be so amazing because I get to be in the midst of all of this and really just honestly be a spectator tonight, as well as a slight interviewer, of course, but, more so in the sense as a fan. So, without going too much into it, tonight we have a special guest in which that is going to bless the stage. And so, but first, before we get to that, Jolyn, I guess we have to get some housekeeping things out of the way, right? For example, if you haven't subscribed yet, go ahead and hit the subscribe button down below. And if you like our content, go ahead and hit that like button so that way you can introduce more cousins to the fold. And on top of that, if you want to be in the know, just like Sandra was the first one here today, go ahead and hit that bell so that way you can be a part of the notification squad, aka the Cool Kids Club. So Jolyn, how do we do today in today's markets?
We have a special request.
Oh.
For all the real 100% Come Up cousins, I'm gonna need y'all to share this live stream immediately, and also send it to at least one young lady, young girl in your life for them, so that they can tune in with you. So if you can all do that now, that'd be great. Just hit share it on Twitter, Facebook. Those are the main two, I guess.
Okay.
Or email or text or something. That's what we need y'all to do. So please do that. And in the meantime, let's get into this market or whatever. What does it, cousins? Okay, so the Dow was down negative 151.69 points. Okay, this is what, the fourth day in a row?
It's like fourth day, third day. I think it's one of those two.
Yeah. So, okay. What's going on? And then we got the S&P 500 down 20.79 points. And the NASDAQ was down 38.30 points. The VIX was at 18.80 points. And oh my gosh, I totally forgot to look up that 10-year. I'm about to do it right now.
Uh-oh.
Hold up. The 10-year was 1.304%. Let me make a note of that. So that's what the 10-year treasury note is looking like. Now for sector performance, as you know, there are 11 sectors. We track the top 3 and the bottom 3 so we can see what that rotation is looking like. And we have financials, energy and materials holding it down for the top 3 spots. Tech was somewhere lost in the sauce, y'all. Didn't even make the top 3 or the bottom 3. So we have consumer staples, health and real estate rounding out the bottom 3. Now for pick performance, as you know, you can head on over to our Instagram page at That Come Up Series, and you can find the most recent pick list. We have Restoration Hardware coming in at number 1 at 7.78% gains today. Gains on gains. So that's nice. And then we also have Lucid and Robinhood coming in at the top 3. Bottom 3, we have TBT, UPS, aka UPS, as my little sister would call it. She used to say, yo, I saw did the UPS truck come today? And for the longest, I was like, what are you talking about?
What is an UPS truck?
She was such a reader. Even then, she was a reader. She's like, UPS. I think that's just so precious. Anyway, and then we have SE coming in at the final last one. Datadog had a 52-week high, and Zscaler reported earnings after the market. So that's pretty much the overall of what happened today. We got a couple of questions, Mark, because we submitted via IG stories. Y'all, just so you know, if you have questions and you want them to be seen, now granted, time-wise, we don't always get to get all of them together, but when we're able to, if you see my story, I usually ask for the questions, non-Googleable questions, y'all. And then sometimes your questions can get answered on the show. I'm getting word from our correspondents that somebody is in the chat.
The family is like here tonight. So if you haven't seen one of our cookout episodes before, you missed a true treat, and it came in 2 parts. But shout out to our cousin Anthony, the real cousin, who's definitely in the chat tonight, showing support for our guests. But you know what? Look, I think it's time to get to it, because I feel like everybody's just like, yo.
We started late too, so we got to go.
We did start late, so we got to make it up to the folks. So first things first, we would be remiss, because we're going to need some help in this one. We're going to need some help in this episode, and so of course, we brought another come up cousin to the table. So I think we have cousin Elle.
We do have cousin Elle.
Wait, is she here? Where's she at? I
think she's in the lobby. Come through.
Hey.
Hey, here we go with the red lip. Okay, I see you.
Coming straight with really hushed her back. Just kidding.
Hey, y'all. How's my family doing?
We are good. How are you?
I am wonderful. Thank you. I know I hide away sometimes, but little birdie told me I was summoned. So I said, well, let me show up and be with my folks, be with my family. So, hey, y'all.
Hey.
Hello. So, all right. So we already got some Black girl magic going on right now, but I think it's time to elevate it up a little bit, shall we?
Yes.
So,
okay.
Let's see if I can do it some justice.
All right.
She hails from a wonderful, outstanding, illustrious investment fund, banking, as well as just everything. But I mean, honestly, she's known across the pond for her investment banking skills, especially on the chief side. So coming to the stage, we have a chief investment banker coming all the way from Loop Capital that is based out of Chicago, Illinois. Also the largest Black-owned firm. Ladies and gentlemen, I give to you none other than Miss Sidney Dillard. Miss Sidney Dillard?
In the building.
Yes. In the house.
Hey. Otherwise known as that girl.
I love all that.
She's
that. That was hype. I like it.
I try to work on my inner Steve Harvey a little bit.
And, Anthony is like, cousin Anthony is active in the chat. So
Yes, he
Uh-oh.
is. And Sydney, we have a lot of fire emojis for you and roses. You're
Yes.
flowers already. All right.
Yay.
Thank you. Thank you.
So tonight, like I said, is supposed to be very, very legendary. We're going to try to get through a lot of the stuff that we had plotted, but if we don't worry, because you know why? There's always a part two. But tonight, so where shall we begin? Like, where shall we, you know what? I know where we can begin. Let's start from the beginning. I always like to ask this question of how did we get here? Meaning from chief, so now sitting today as chief investment banker at Loop Capital, how did you get here?
All right, that's good. So I was born a poor Black child in Georgia. But anyway, no, I am first generation college graduate in my family. I know, Elle, we were talking earlier about your family and just the rich legacy that you guys have at Tuskegee, but I'm first gen, and that still is a thing for us in the Black community. But in any event, when I grew up, I actually wanted to be an attorney because that's kind of what you see, right? Like nobody had seen investment banker or banker really kind of that look like us on any TV shows or any of that kind of stuff. So, where do you kind of learn that? Where do you get that? But I ended up going to Stanford for undergrad. I was an economics major. And one of the things that was really helpful to me that got me exposure to banking was a gentleman out of New York. His name was Mike Oshowitz. Mike had started a program called the Sponsors for Educational Opportunity to expose minorities, really Black and brown kids, to Wall Street, right? To get us access to opportunities on Wall Street and investment banking. And so that was my exposure and my first and my opportunity to really kind of start to learn about this business. So when I graduated from Stanford, I started my banking career a long while ago. And really that's what I've done over the period of 30 plus years, really working with corporate clients and working in that ecosystem. I know Elle's involved on the commercial banking side. I've done commercial banking. I transitioned to Loop Capital Markets. Mark, as you mentioned, we are one of the largest privately held investment banks in the country, and we are predominantly African-American owned. I'm super proud of that. And when I came to Loop now 19 years ago, I was excited to do that. It was a startup at the time. It was about kind of year 5 of the firm. We had about, started with 6 people in 1997. When I came in 2002, we had probably about 25, 30 people on the platform. We're now probably about 225, 250 people at the firm. So we've grown quite a bit and had a lot of great opportunities, a lot of visibility, folks like my cousin Anthony who are on here, who actually, I don't really get to talk to Anthony without being chaperoned in the context of work. And I'll talk to you guys about that as we go through as to kind of why that is, why we are separated by walls, given regulatory things in the context of our business. But the point is that, we've grown and we've had a chance to work with a lot of companies in the Fortune 500, a lot of companies that have come to the market to do an initial public offering, an IPO, to offer their shares to the public for the first time. So I'm excited to talk a little bit more about that and just about kind of that ecosystem to share with folks tonight. But that's how I got here. And, one of the things that I'm really focused on is how do I make it so that we demystify this industry, so that other, Black young ladies are attracted to and feel confident coming into this industry so that, we are more present and more visible in the context of it. So a lot of great opportunities, lots to learn, lots to share. And I want other folks to be a part of that.
Nice. So let's start off with the I guess the big question in the room, like that a lot of folks probably misconstrue or have, like, they typically miss the understanding of what is an investment banker. Like,
Yeah.
what does an investment banker do? Like,
Yeah. And investment banking, you know, I know particularly kind of at my table growing up, that was not a discussion for us, right? You know, now my kids may know a little bit more about it because of, you know, because they grew up with their mom involved, you know, in this business, but I knew nothing about investment banking and what that consisted of. But essentially, you know, you guys have spent a lot of time talking with, you know, with the cousins about investing and, you know, what that means and, you know, large caps, small caps, you know, SMID, et cetera, fixed income, stocks. And so the investment banks are really, you know, we are a part of the ecosystem that actually produces, you know, manufactures, brings to the market the opportunities around, you know, fixed income bonds, around equities, IPOs, or secondary equity offerings, or just really kind of the trading of existing shares. And so that's really the role that we play in the context of kind of this overall ecosystem. It's the investment banks that, you know, make it so that shares move between folks as broker dealers. And then the bankers are the ones that bring companies to the public markets so that investors can buy their stock for the first time, or that companies can come together to create larger companies or sell parts of your company that doesn't really work for you anymore or doesn't fit with your strategy. And that's called, you know, M&A, mergers and acquisitions advisory. So those are all of the pieces that fall under what we do from an investment banking perspective. And you've had cousin Anthony Tacumba on, and Anthony is a part of that ecosystem where he is basically doing kind of the research on companies that are publicly traded, and his area of focus is in the consumer space. And basically he's doing the analysis and really understanding the market to be able to, you know, provide his view around kind of what the direction is from a price action perspective, you know, for the companies that he is focused on. And he's been quite visible in his view around some notable names that I'm not going to get into.
Yeah, he was pretty vocal this morning.
And so, but you know, he has a role that he plays in the context of this ecosystem as well. So I'll kind of leave it at that in terms of kind of these are the things that we're doing. So, you know, my role is really, you know, I'm in the make new friends business, right? I love people. I love working with companies to kind of understand, you know, what it is that they're trying to do, and then how, based on our capabilities and the tools on our tool belt, that we can help them do that. And primarily that is to raise capital, you know, and or to, you know, become a bigger company, or at least make sure that you're positioned in the right way, you know, to drive growth, and eliminating those pieces that don't help do that.
Sidney, I have a question for you.
Yes.
So you talked a lot about what it was like for you and not seeing any other people that look like you in certain, you know, sessions. My question for you is, there are a lot of little girls right now watching, and as you begin to think about like legacy and what that means and the mark that you're leaving and the impact that you're going to have, that you're having right now in this moment, what are those qualities, skills that someone can cultivate in order to be in your position?
Yeah, I think, you know, that's a really good question. And I need to kind of, you know, think back and kind of put myself in kind of what was my mindset, right? I think part of it is, you know, for me, coming from kind of a first generation viewpoint, you know, around, you know, being in a university setting, this was a first generation, you know, opportunity as well, right? As I started my career in banking. But the one thing that I do think that, you know, that I held is that I'm very good at observing and assessing, and then, you know, understanding kind of how I can fit into that, right? But I think part of that really comes from preparation, right? Because like when you don't know an environment as well, then you got to like make sure you study up on it so that once you get there, you know, you're comfortable enough to be able to, you know, navigate and then kind of observe and then, you know, pull the pieces together, as it might fit you in that environment, to then be able to move it forward, right? And so, I think I became very skilled at being able to do that, right? And coming into environments that I didn't know all of the pieces to it. It's kind of like when I went to Stanford, I didn't know that environment, right? My parents did not graduate from college, so I hadn't navigated that with them, as a kid, right? Like my kids would go with me to my reunions or go with me on campus. So I had to kind of assess that and then, kind of read kind of what was happening in that environment so that I could, adapt very quickly, right? And then, make it so that it fit me as well, and that I could assess that environment. And I think that's really the same thing that, that we all need to think about doing in those settings that you may not be familiar with. And whether that's, starting a career, in something that you may not have as much of a footing in, but how, that process around gathering information, taking it in, putting it within your context and then putting that back out, right? And so that's the piece that I think is really important about, these kinds of opportunities. And it's very similar to, what the cousins have done in terms of, as you guys have helped give them content around, how do you develop an investment competency, right? Because everybody didn't start out knowing kind of all of the things that perhaps they know now, and they'll continue to expand and grow in their knowledge, right? But they're taking in that information. The fact that they show up, for your show, they're doing exactly what I did, as I was coming into an environment that I wasn't comfortable with. You take in the information, you do additional work, right? And then you make it so that, what do I need to do so that it fits me? And then you put it back out there.
We call that getting in where you fit in.
That's it.
So I guess the question is like, what was it like, being in a very much so like male dominated space, and ultimately, getting through this part, like, or getting to this point in your career, what was that like?
Yeah.
We know that it's making it to the top, it's like of course you see very little folks who look like us. And then of course you start to see very few folks who look like us as well as that look like yourself. What was that like?
I think it's really interesting because to a certain extent, when you aren't as familiar with the setting, it actually helps you, because you can be a little more tone deaf to those things that, like, well, around should you be here or should you not be in this space, in this place. So you kind of don't know that you shouldn't, right? I mean, you certainly recognize that there aren't there's not a litany of folks in this space that look like you, right? But you also aren't intimidated by that, because it's like, oh, okay, well, whatever, right? And particularly when you bring a certain level of competency to the table, then you navigate the environment that you're given. And one of the things that I did, because this business is so much about relationships and being able to connect with folks, right? But then bringing your intelligence to the table as well, right? But first you got to connect with people. And I've always been really, really good about that. And so that piece helps. And so for me, as, an African-American woman showing up in this place, in this space, it was easy for folks to remember who I was. So, use everything that you're given, right? Work every asset, right? Like, it was easy to remember me. And so I use that to my advantage, and that's okay. That's all right. Because I show up with other things as well, right? But the first thing is that people need to know who you are, right? And then you can go from there to develop and then figure out how are we going to grow and how we're going to manage, how we're going to keep this relationship going, right? What are the other things that I can now bring to the table because you hear me, you connect with me, and I can come back to that, and then we can move forward together.
Okay, so now we're getting ready to switch it up now. We're getting ready to change gears, because now I have a feeling that cousin Elle is going to also she's going to be like, oh, we talking about this? Oh, we're about to tap in.
me sit up a
Now
little
we're about to
straighter.
talk about publicly traded markets. We're about to talk about IPOs and, what is it that, one, what does it take what does it look like? What is like, because a lot of folks don't understand that process of taking a company from private to public. What does that process look like? And then on top of that, we're also going to get into some of the trends of what we're seeing, because I think 2020 we saw like a completely different model just blow up out of the sky of like, SPACs that were literally led to publicly traded markets. So let's start off first with, for those in whom which that don't understand, like, how does a company go from private to publicly traded markets? What does that process look like?
Okay. So it's a great question, right? And you're right. And so there are with SPACs, with special purpose acquisition corporations, which have been around for decades, right? But kind of SPAC 2.0, as we see it right now, it became like you'd have to be, kind of like live in a hole to not have heard SPAC last year, right? Because it was just on fire.
Yep.
But it became another route that private companies could become public companies in a fashion that's a little bit faster. It was easier last year than it has been this year, and there's some reasons for that. But the point is that let's talk about this process around a private company becoming a public company.
Yep.
There's and depending on what industry you're in, but let's talk about tech a little bit more, right? Just because, given what's going on in that industry, and that's a really big umbrella, but I'm going to use it broadly.
Yep.
Is that, there's a lot of interest, a lot of, because there's so much innovation that's happening there, right? And because there's innovation, it's also creating a lot of significant growth opportunities as well, right? And so that's what the markets like to want to, investors want to buy companies that have a lot of growth opportunity, right? And so tech certainly represent that given the innovation that's happening.
Yep.
One of the things that had happened really kind of over the last kind of like 5 to 7 years is that there was so much private capital available to, fast growing private companies that it actually really delayed the time of that they would actually IPO, right? Which is because you come into the market, you do an initial public offering so that it gives you access to a larger amount of capital, right? Than what might be available in the private markets. And so, but there was so much private capital that had been built up that companies were able to access that private capital and really stave off the process of coming to the public markets, right? Because when you come to the public markets, there's a lot that comes along with that, right? You'll have folks like Anthony Chikamba, that'll have a view, that they're putting out there in your company, right? There's a lot that you have to do and communicate to investors, right? Because you're required to do so, and you got to live your life out in the public, right? And if you're not ready to do that, and if you can get the capital that you need in the private markets before you actually come to the public markets, that's what companies were choosing to do. Mm-hmm. But in any event, so we get to 2020, right? And we have a pandemic, but we also have, a lot of IPOs, a lot of companies come into the public markets as we came into the summer of last year, right? Just a barn burner. You had, in addition to the SPACs, you still had folks that were pursuing traditional IPOs. And so the things that, that companies are looking for is, have I exhausted, or, do I need to be able to get access to more capital than I can, through the private markets, right? And then do I have enough growth in my future, and is my total addressable market large enough, and I can capture, a significant amount of that growth that I can deliver something that investors want to be able to be a part of. And so you kind of are assessing that to determine, am I ready to go public, right? Because you want to be able to have enough investor interest in your company, and you've got a sound enough business model, a significant enough total addressable market to be able to make it so that, this is a company that should be public and that investors want to buy. So those are some of the considerations that companies think about as they make that decision around going public, right? And then sometimes you have it so that those folks that actually that may have started the company and they own a lot of equity in the company, and that includes the private investors, the venture capitalists like you are, Mark, that you're like, you know what, I'm ready to monetize my investment, right? And the way to do that is to come to the public markets and, and then you get to sell some shares that you've got a low basis in, and then, and then you're really doing this. So, that's the process, and that's what is kind of being talked about. So along the way, so then companies will then start to talk to investment banks, right? Investment banks will, come in and, walk me through, your business model, walk me through your financial model, right? Which shows, how you're thinking about how you're going to, how your business model translates from a financial perspective, and what does that look like? And then investment banks will then go about that process of, what's going on in this market? What are investors looking to see? Can we get enough investors to the table to maximize kind of the valuation of the company, based on what the growth prospects are, right? So they're looking at other companies that are public, because Mark, I know we were talking earlier about, well, how do you value it? And Jolyn, you asked about this. How do you value it? Well, you value it looking at other companies that, may be in that same space, or, that are comparable companies. And sometimes you may not have an exact comp. So then it's, then you're trying to pull pieces from different parts of companies to kind of figure it out. That's the art of it, right? Like, let me get a little bit from here and a little bit from here. And then I'm going to apply, this multiple to this piece and this multiple to this piece. And then together, I'm going to come up with something that
got an idea.
Like how you value it. Right, exactly.
Sidney, I've got a question for you. So how has, there were so many companies that had record-breaking years during COVID. Like when it first emerged, people thought, oh gosh, our sales are going to suffer. And there were so many companies that had record-breaking years, whether private or public. So how did that factor into valuations during that time?
Yeah, well, that's a good point, right? Because you still have the same, you have the same process, right? Because those companies that were comparable companies that were already public, so you're looking at those companies to give you, some sense for valuation and multiples, right? And when we talk multiples, we're talking about, particularly for tech companies, sometimes as you're growing, and you're scaling, you don't have income, right? But you've got revenue. And so then for those companies, you're looking at what are other companies and what's the multiple on their revenue that's creating their valuation. And then you're looking at revenue multiples to come up with a valuation. And then you're also looking at, okay, well then how are you looking at, what is your forecast? What's your financial model look like in terms of what you think you're going to look like over time? And then you're doing an analysis to create a discounted cash flow model to determine then what does that make you look like from a model from a valuation perspective, and then other transactions that have occurred, and then incorporating all of that to then determine, okay, what's the range here? What does this look like between those companies that are already public? What's your forecasting? And then other transactions that have occurred, perhaps in the private markets and valuations that you're aware of, to bring all of that together to then determine, it looks like valuation should be here. And then investors are going to tell you, right, as you're having these testing the waters discussions around, this is what this might look like. How might you look at it? How might you value it? And you have folks like, our cousin Anthony, that spends times with investors to kind of give their view from an analyst perspective. And then, and then investors are also doing their own work and testing it against what you're saying to determine what they think valuation is.
Right. Okay.
I have a question. Okay, so I'm gonna switch it up. We can come back to, well, it might come back to IPO too.
It's okay.
Okay, so this question is more so about the mergers and acquisitions.
Yeah.
So because we had a lot going on, right? So we look at the beginning of the year, up until August. I didn't look at September numbers or anything.
Yes.
So we had $1.8 trillion worth of acquisitions in the US and $3.6 trillion globally. So with that in mind, it seems like, okay, the outlook looks positive. But
Yeah.
what does that what might that indicate for like in the context of financial markets, IPOs and SPACs? So we have all this merger and acquisition activities, and what can we glean from that?
Yeah, I think that's an interesting question. So I think a couple things, right? You know, companies ultimately are trying to grow, right? You know, if you're a growth company, you're trying to grow. You're trying to add either more scale. You're trying to grow earnings, right? So that you have a higher EPS, right? So you're looking at what are the ways that I can do that, right? And so you can buy back shares, right? So you reduce the number of shares that are out in the marketplace, and then you increase your EPS as a result of that, right? Or, okay, I have capital, or I have a strong stock price, and I can use my stock to then go out and acquire companies that fill white space that I might have in my business growth plan, right? There's something I don't have. And so either I'm going to build it internally or I'm going to buy it, right? So you're looking for what can I go out and buy, and I can plug that in that perhaps I can't build it as quickly, right? To get to that growth that investors want to be able to see. And so then that's what really starts to create the opportunities for M&A, right? Which is going out and buy, right? Or my stock price is not doing particularly well because I've got some pieces of my business that the market is not valuing as much as they would if I didn't have this piece. And then I would have the benefit potentially of, a higher valuation or a higher multiple, or, by virtue of the fact that I don't have this piece that may be a slower growing part of my business, or may not, the market may not ascribe as great of a value to it. So I'm going to get rid of that piece and I'm going to reshape it so that I actually end up with, with parts with a business, and its components that are more valued by the market rather than less. Right. And so that's all of, what companies are doing along the way, which is they're trying to shape and ensure that, I've got something that is as highly valued as possible in the market for, for the sector that I'm in, or my total addressable market that I'm focused on. I want to be able to have the highest, valuation and in the context of that. And so what do I need to do to get to that? So that's what creates kind of this movement of parts, right? Like, okay, I'm going to get rid of this. I'm going to pull this in. And then, so the other piece is that, you talked about the volume of M&A activity, but in order to move those pieces around, right, there's capital that's flowing as a result of that, right? I got to finance it, right? So I'm going to issue equity. I'm going to use my stock to do it, right? If it's just a stock deal, or I've got to issue debt because I got to come up with some cash to kind of pay for this to acquire it, or I'm going to go to Elle and I'm going to get some bank debt, right? Or a bridge loan. And then I'm going to take out that bridge loan with, with bonds as an example. So you have kind of all of those pieces happening. But to your point though, about kind of what does that have to do with kind of with IPOs and SPACs that were happening, right? Now, one of the things is that the markets performed really well. Right. And we weren't really sure about that. Like, if you remember when everything shut down in mid-March, right, we all came home, we all started doing this. We weren't really sure what was going to happen. And so what we saw in our business is that then about the beginning of April, once the Fed came in and created liquidity in the market, because liquidity dried up because people did not know what was going on. Right. So the Fed created liquidity. Yep. And then everyone started issuing, like bringing in capital, right? Like kind of like, how squirrels, like, for the winter, everyone who could possibly get access to capital. Elle, you would have seen it in terms of those that don't access public markets. They were coming to the banks. They were drawing down on their revolvers and lines of credit and all of that. And so, and then for us on the other side of it in the capital markets, folks were coming to the bond market. They were issuing equity. if they couldn't come to the bond market because maybe they had too much leverage, so they had to issue equity to make sure that they had enough capital, because it was really uncertain and folks did not know what was going to happen.
Yep, and they wanted to know what their cash burn was going to be able to sustain through a period of time.
Had no idea. They had no idea. But what ended up happening, depending on the industry, but as you said, a lot of industries were thriving during this period of time, right? Yeah,
pretty much everybody except hospitality. I mean, they got hit pretty hard.
Travel and hospitality, it was very difficult because we weren't doing either of those.
Right.
Some industries, cash became cheap.
We weren't hospitable and we were not traveling.
Yeah, hotels they got hit hard. So yeah.
And the airline industry.
Right? Airlines too.
Leisure.
Billions of dollars. Right. Because their cash burn was crazy. Right. And they had to contract. And we're seeing that now because planes are like super crowded. I was just on one yesterday.
Right.
So, but
also you're starting to see that like companies like Ryanair, they're starting to decrease. Like, I think they cut back on their spending from buying Boeing planes.
Yeah. Right. Right. Because what you do, right? I mean, if you're in that industry, right, you're trying to reduce your fixed costs, right?
Yeah.
And so for airline transportation, right, your biggest fixed cost is the cost of the planes and your people, right? I mean, that's kind of it.
Yeah.
So where are we in the business cycle now then?
So that's a really good question. Even the, yeah, so even people, don't necessarily, so it feels like, so here's the thing that's really interesting. It does feel like we're going to get, all of those companies that perform well as we, came through the summer and into the pandemic. I still think that there's runway for them, right? Because we still got to deal with the Delta variant. There may be the Lambda variant. Jolyn, I know you were talking about that on Tuesday's show as well. And, so it still feels like there's more there's more out there for those companies to capture by virtue of the fact that people are not running back into the workplace. And for travel, and hospitality, folks may be going on vacation like they never, nobody went on vacation last year in August. Folks did go on vacation this year in August, but nobody's doing a lot of business traveling, right? And so then what does that mean, right? Because that's kind of, those are the full freight payers, right? As opposed to, the vacationers, right? You only do so much vacation. So, what does that mean? So I do think that there are industry that will continue to thrive in this environment because we still have some vestiges of kind of what we were dealing with as we were coming through the pandemic before the vaccine last year that we still, I think, are going to continue to have to deal with. All right. I think that there's some systemic changes that are just going to persist because folks, it's changed how we are, who we are, how we work, where we go and those kinds of things. And I think some components of that are going to stay. And so those companies that cater to that will continue to grow and to thrive. And then others are going to have to rethink, how do we reshape our business to fit kind of what this new paradigm is, given what we've come through.
Now, you got a question?
No, by all means.
Okay, so now that we're in like this whole, there's been, a paradigm shift, and we've seen smaller companies, die out, and we have larger companies taking up more market share. And it seems like now that we're, in this, it's almost like a new wave, and technology has definitely been like the fuel for that. So the question is, how then, like as investors, and then also just from whatever you're allowed to share, like what you're seeing, how do the cousins start to put those future caps in, like with the IPOs that are coming out, with the different mergers and acquisitions for companies that are filling the white space, as you said, for their businesses, and starting to envision like, okay, what does our business look like when there are all these viruses running rampant? Like, what if, this is the reality, this is how it's going to be. How do we start to think about that, like future wise?
Yeah, I think that's a great question, right? Because I think what you end up doing is like, okay, let's think about this, right? I mean, part of like how I think about, folks participating kind of in, putting their own investing in, right, where they're selecting their stocks, right, is that you got to go with the stuff you know and understand. That's my view always, right? Because the stuff you don't understand, like, it's just like, you toss it up in the air and hope it works, right?
I know tech.
Great idea to do that. I don't do that with my money, but the point is that, I think that that's the piece that folks need to do, right? Do that with your friends, with the folks that are in your sphere. Like, let's walk this through. Let's talk about like, what could this look like, right? And if you bring to bear kind of everyone's set of experiences around it, then you could really come up with some really interesting ideas around kind of where should we be as a result of that, right? So like if you start with Jolyn, like what you said, if we start with, okay, what if this is like our new reality, right? What if we are going to have, it's going to be Delta, it's going to be Lambda, it's going to be IOTA, it's going to be new, it's going to be this, it's going to be that, right? I mean, what if that's our new reality? And then, so what does that mean for us, right? And so what does that mean about kind of those industries, those companies that would thrive in that? And then, and so I want to make sure that I'm there for that, right? Or what if we
looking
end
for
up
solutions
with, in another scenario, what if it all goes away and we don't have to deal with that, and all we are back to is, people sneezing out in the open, on airplanes, and it's just a cold, right? What is that? So, and then what does that mean, right? And then where should I be, right? And then you have to decide, am I going to be long or short as a result of that, right? And make that decision too, around, what it means. But I think, for us, we can share that like with our community, right? And think about kind of what that is, right? Because you want to make sure you're kind of walking it through and like having the benefit of everyone's experience around like, what could that look like? And you could come up with some really interesting kind of places where you should be as a result of that, as an investor.
Yeah,
That's
I think you
great.
look for like, what are the problems and what could be problems, and who could possibly come up with a solution to that problem.
Yeah, exactly.
So how I have been thinking about this is from the perspective of leisure. For me, the future is leisurely. Anything that makes my life more leisurely is where my investment eye is going towards. And I was just having a conversation with one of the cousins yesterday about like, well, how do you know what companies you want to buy stock in versus the ones that you just want to do options in? And we had a brief conversation about what that looks like. And so I was letting that cousin know, for me, my perspective is from the perspective of leisure. Like, our ancestors labored enough. So I'm on my leisure vibes, and I want my children to be on their leisure vibes as well. And so I'm going to be thinking about the companies that are going to make things easier for humans to not just live, but to thrive in. And so part of the question goes back to, okay, that's easy. Like, having that perspective is easy for me because that's just how I roll. But like, what if you're new to investing? Like, how then are you supposed to come up with,
where do you start? Right.
Yeah.
And I think, and I'm not going to give any investment advice because that's not what I'm here to do. But I think, and I think that, again, I still think the best place to start is start with what you know. Start with what do you buy, right? Like, I think it's always interesting to start in a place where, where you're the consumer, right? Because that's more engaging for you, for an investor, right? Because you can connect with it, right? And you also will just have more interest in it as opposed to something that doesn't touch your life at all, right? And I think that's just makes it a lot more difficult for people. So it's just kind of like, look around you, right? And look around, I don't know, what do you like? Do you like art? Do you, what are the things, right? I mean, Mark's looking around, right? I don't know, your dog, right? Like what's in the pet ecosystem, right? Which is, growing like crazy in terms of that, that industry. But the point is that look around you and look around you and then look at kind of what's going on, sit on your front porch, see what's up out there, right? I mean, you just, and you see enough of it and you're like, maybe a lot of people are doing that. Let me, you know. But I'm just saying,
Be a market clown.
that's how I think that folks should just kind of start to think about kind of their environment, and then how does that translate into, you know, you know, where you might think about putting your dollars.
Yeah, don't chase shiny objects, y'all. Start with something that you know.
There it is.
You know.
So I guess the thing is, because I know that we're coming close to our Cinderella hour, but I'd be remiss if we didn't talk about it. Now we have one of the two things that we could talk about, and we can leave it on the finger if we want to.
Okay.
We either talk about ESG.
Okay.
Or we could talk about retail investor and the institutional investor.
Oh gosh. Okay.
Ooh.
Oh, which one?
You know what? Let's talk about, you know, I mean, we can talk about the institutional kind of versus the retail investor, right? But I think the fact of the matter is, and Mark, we talked about this the other day, right? The market as it stands now is still an institutional market, right?
Yep.
Mm-hmm.
That's just the bottom line, right?
Yep.
Because individuals even like me, because I don't have time necessarily to be picking stocks, right? I'm not like a great stock picker, but so I'm putting my money into a fund or whatever. And so that institution is bringing kind of all that money together, and they represent the institutional market. That's still the largest part of the market, right?
Yep.
Now, there is an opportunity, and we're seeing it, right, where the retail investor is all in, right? There's a lot of news about it, all of that, right? And so, you know, I think that, you know, for part two is a discussion around what does that mean long term, right? Is that sustainable? Is it, you know, does that represent a sea change? And that's something we should talk about. But for right now, the market is an institutional market. That's just it. Okay. So let's talk about ESG, however.
Hey.
So, because this is important, Mark, because, right, so ESG, right, we know that there is an increasing flow of funds into ESG funds, right? Because individuals like us, you know, are down with that, right? We're voting with our dollars that we want more companies to do the right thing within the context of ESG, right?
Correct.
It's still not, and particularly in the equity markets, and even in the fixed income market, it still isn't the majority of the capital, but it is growing faster, right? The percentage growth rate is more. So we know it's important, right? And so it's just going to continue to do that, right? Now, the one thing that I will say, because I am, you know, because, you know, I'm a partner in an investment bank that's majority African-American owned. The one thing that I will say is that I want folks to think about is they're putting their dollars in, that we also, I think that there's an opportunity to make sure that there is advocacy to the flow of your dollars, right? So just as an example, and this is just a small example, right? But like if you're putting, I don't know, whatever, any large mutual fund house, and they've got an ESG fund and you're putting money in there, like, don't you want to, you know, as you're putting your money in that fund, you want to understand what exactly are you doing, right? How are you living out these ESG values? And we saw this in the news, I guess about a week and a half ago, with a large German bank that was, called out by their regulator because they had an ESG fund, but they weren't doing what they said they were doing. Right. And so then as investors, you know, you have to really understand kind of, are you doing what you're saying you're doing? And then are you representing my interests as an investor? Right. And then how do you advocate for that? Right. And I think that that's an opportunity for retail investors to use use social media platforms to come together to create, you know, blocks that ensure that, you know, those institutional asset managers where you're putting your dollars in, that they're actually doing what you want them to do, right? And that you're using your collective influence to ensure that that's happening.
Yeah. Like one of the interesting things that we also saw like at the very beginning of ESG was you also see that some investment banks, before they even take certain companies public,
Yes.
like
Yep.
one of the major things that we're starting to see is, okay, let's see what that board looked like.
Yes. Right.
Yep.
Exactly. And I think, and the thing is that, and for a while, and not, this wasn't too long ago, I mean, the tech companies didn't have diverse boards at all.
At all.
Right. And so now you're seeing, but you have, the NASDAQ and the New York Stock Exchange that also are requiring that. And then of course, California, which is out you guys' way, they have it so that all the public companies that were in California needed to, have at least one woman on their board and so forth and so on, or you get fined, et cetera, et cetera. So there's there is a lot of those components that are coming together. It creates opportunities for us. It ensures that we're, they're at the table, the voices at the table, and, to help kind of just create an ecosystem that is reinforcing around all aspects of that, right? Because then if you have it on the governance side, then you can help drive things kind of in the social piece as well as in the environmental piece.
Great. So I guess to I guess take us home tonight. Like I said.
And one more thing about this.
Go ahead.
Let's bring this back to what we were talking about in terms of then, kind of our presence, Black women, in this industry. So let's pull it like all the way through, right? Because as an example, with regard to ESG, there's also an opportunity, like as an example, I had mentioned to you, we had worked on a bond transaction for a large telecommunications company that has, as a part of their they were doing a green bond. They did a green bond as a part of their green financing framework, and it's on their website. They have in there that the underwriters that actually work on their bond transaction need to, ascribe to the UN sustainability principles and or be a minority-owned investment bank.
Yep.
And have a demonstrated commitment to diversity, equity, and inclusion.
Yep.
Right. Mm-hmm. So those pieces are really significant in terms of kind of what does that mean? And then, other firms are basically, okay, my service team that you have, that covers my account for your investment bank or your law firm or whatever, I want it to be diverse. I want Black women on it. I want, Latinx. I want a diverse team. So don't show up here with a non-diverse team and saying, this is my service. This is your service team. We're not having it. And so all of that, I think, comes together to create opportunities, for us in this business when you've got kind of the whole ecosystem that's saying, this is what we expect, right? Because then, we don't have this as an issue, but if you're a service provider and you don't have diversity, then you need to ensure that you have some if you want to do business with these companies.
Elle, in other words, we would say that's why Mary had a little lamb, right?
On it. On it.
So,
and it's.
Go ahead, Elle. Go ahead.
I couldn't say it better than what Sidney did. I mean, it's so important. And there are a lot of companies, and particularly in our industry, in banking, that are really starting to take notice. Companies or financial institutions are now starting to have ESG committees. Like they're really realizing the importance of that. I'm fortunate that I work for a company that has been an early adapter of that. My leader is very intentional. She is a white woman. She is nowhere near my age, but she certainly has championed for me and sponsored me and made sure that I had opportunities because she recognized my talent. She's very intentional in her hiring process. And, which it was so, when you have leaders in our industry who get on public platforms and say, oh, well, we just can't find the talent. Excuse me.
Yeah.
We're here, like we're here. And so, it just, if anything, I just hope that this episode has been a love song to young Black women to know that you can occupy space in this field. We're
Yes.
here. We are here. And we will help you if you want to be here. I mean, I think that's probably one of the most loving things about being in this industry. I mean, it can be difficult at times. It is white male dominated, but there are women who will champion for you. There are people of color that will champion for you, and make sure that you can occupy space here. And, you know, I just want to say publicly that if you have an interest in banking, you know, reach out.
And if you don't know if you have an interest in banking, let's talk about it, right? Because I think, you know, what I've seen, Elle, is that I see not a lot of Black women show up for these opportunities because folks don't know, they're not sure, or, you know, they've been led to believe that that they don't have the capabilities to bring to the table for it. And nothing could be further from the truth.
So I guess the, like, you know, and I'm going to give you the benediction today, Sidney, so you could take us away. Because we know that this is a part 2 series, but, you know, if you can leave something with, you know, those young girls that are watching today, those young women that are watching today, those that are aspiring today, you know, what would you say to them, you know, after, of course, one, catching a ton of gems from each of you today, but what would you leave with them as we close today's show?
I would say stay ready so you don't have to get ready. Ooh, knowing the landscape. Amen.
The doors of the church are open.
Ooh.
Will you come?
The grass is green until it's not.
Can you say it again for the people in the back that, you know, maybe just didn't hear you?
Stay ready so you don't have to get ready, right? And what I mean by that is that, you know, I think the opportunities are out there for us. Be ready for them, right? So that opportunity meets up with preparation. It's open for us to be at the table. You just want to be ready when you get there. So do the work.
Yep.
I know we have to close, but there was one thing that you had mentioned. I think it was early. I can't remember if it was on or off camera, but you were talking about the separation, the division.
Oh, yes. Yeah.
Like your
cousin Anthony and me.
Yeah.
Yes. So what had happened was,
Hold up.
So I'm in banking and cousin Anthony is in equity research. And so basically, this is now over a couple decades ago. Yeah, about a couple decades ago, there was much more interaction between banking and research to come together and basically get opportunities. And sometimes with companies, like, you know, to bring a company to the public markets, to IPO a company. And so banking and research would work together. And then sometimes the research analyst would basically not give as much of a truthful view of the company, because, you know, the company is expecting you to say good things about it, even if it wasn't, you know, there were some things that weren't as good, but in order for your firm to get the business, you kind of went along with the program. And so what ended up happening is that there was a settlement, and because there was a lawsuit brought by the Attorney General in New York at the time, it was Spitzer, that made it so that there was a settlement in there and rules around how it is that banking and research can interact or not interact with each other, to ensure that there was independence for equity research that was not influenced by banking in order to get business from clients as a result of, you know, having sway over research analysts and what it is that they would say about a company to investors. And so that's why Anthony and I are, if we need to talk about, you know, something in the context of a company, we have to be chaperoned by our compliance team to ensure that we are not sharing inappropriate information between us.
I just can't wait to have a Black company like go IPO. Like we need that. Like,
Well, I'll send you an article on one.
say less. Say less. And on that note, y'all, thank you so much for like, and just, I hope that you had your pen and paper. Like, I know that you probably like were just consistently like writing, because I know how it gets when I go. And, you know, for me, this is going to be a show that I'm definitely going to go back and watch again and again and again. And for each and every person out there that is looking to get into this space, I'm probably sure they can find you, Sidney, as well as Elle. Yeah. You know the vibes. They can definitely find you as well. We've been seeing Anthony, cousin Anthony. He's been like crazy in the chat, so he's been lighting it up. I haven't had the opportunity to see it because I've been very active in today's conversation. But I mean, Sidney, thank you so much for rocking with us, and we can't wait to have you back on the stage with us. Elle, you are always welcome at any time, Queen. So feel free.
Thank you, my brother.
Jolyn, sis, you know the vibes. And until next time, I am Mark Monroe, accompanied by who's first? Let's go with cousin Sid. Wait, we have to do it. Sidney,
Okay.
Which cousin are you? What cousin are you?
Okay, I gotta come up with okay. I am cousin Possum Trot.
Oh.
And you don't know what that means. You don't know nothing about that.
We're gonna have to come to the cookout to find out.
Well, we're gonna save that one for the cookout, or we will save
part two. Part two.
Okay.
Okay, part two. We will definitely
on that.
All right, cousin Elle. There it is.
Love y'all. I always enjoy spending time with my family.
And I'm Jolyn GC, in the place to be where the vibes are hella leisurely.
Oh, okay. And this has been your come up. We will see y'all in the next one. Keep learning, keep researching, because the more you learn, the more you earn. Be kind. We'll see y'all in the next one. Peace.